Hello traders, Gary Wagner with the Gold Forecast here. It is Friday, as we say on the islands in Honolulu. Happy Aloha Friday. It is November the 26th, and this is the Daily Report, our weekend review. Gold currently trading lower, off about $10 to $11, trading at $13.63, $13.64. Traders, here we're looking at a 240-minute chart. Every candlestick is 4 hours. And as you can see, we were very, very quiet through the Thanksgiving Day holiday here. It did start to sell off as it went into Europe, and then as we opened in New York, we did have this sell-off where it hit a low of about 1350. It did find a base at that point and did find support and then began to move higher. It was off about $20. Currently, as I said, off about $10. Traders, we are looking at a weekly chart in gold, and as you can see, for this week we opened roughly in terms of price area itself at 1353. This week we have had a high of 1382, so just $6 off of that first record high, that 1388, and we are currently at, as I said, 1362 to 1363. Traders, of course, this is our daily candlestick chart, and you can see the signal which issued our buy signal or entry level, and that was this Three River Morning Star that we got a week ago. And as you can see, the market has traded higher, but we did fall into resistance, and that resistance right around the 1380 area right in here has been an area that at least up till now the market has been unable to breach or take out. The one concern or the one factor that I am looking at right now is the possibility, and this is just on a technical basis of course, to see some sort of what we'll call a head and shoulders formation. The left shoulder, the right head, and then the right shoulder. Now, it is certainly not complete at this point, but it is something that I have been looking at over the last couple days as a possibility. We have our long position sitting around 1354. We have our stop sitting just below the lows of this entire pattern group, which is 1320. This is where we put our stop. So we're pretty good, I believe, in terms of protection. But I do want to see if we get any kind of follow through on Sunday to the selling pressure that we have seen over this last day. Now, fundamentally, interim term, I am bullish. Long term, I am bullish. Short term, I do believe that, as I've said on Wednesday, we have to be able to overcome this one particular area, and this would be that left shoulder. We've got to be able to take that out, I believe, to continue higher. So we are at a very, very critical point. My recommendation, of course, is going to be to maintain our long position, to maintain our stop, with the caveat that if we see continued selling pressure in here, we might exit the trade with only a small amount of profit or exit the trade with a small amount of loss if we see this market moving down and we decide to exit the trade. This last chart here, this is also a daily chart, but in this daily chart I have put up our Fibonacci retracement that I am running from the beginning of this last wave, wave 3 right in here, and I have moved it all the way up to this top here so that we could do a projection. And as you can see, we do have that resistance, and I believe that it's pretty strong resistance right in here that's based off of these tops. And if we carry that over, you can see that this is the point that we have really been unable to take out as of yet, and it is the point that I've been talking about pretty much all week as a very, very critical factor. Let's pay close attention to see how the market reacts. We've got a market right now that, although traded about $20 lower, is rebounding quite nicely right now. And my belief is that we simply want to maintain the position that we have. We do not have enough information yet to exit the trade. nor do we have enough information right now to change our stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Sunday for the Daily Report. Bye-bye.